How's it going today? Today we're going to pick some stocks today. I've been kind of late, been kind of sick, been kind of delaying these and everything, but now we're going to do them. I'm feeling a little better, everything. We're going to pick some stocks. But anyway, we're going to kick this one off. I'm going to pick three of them. I'm going to give you some reasons why to buy them, maybe not why. And we're going to just kick it right off. The first one is APP, or APPN is Aprin. But anyway, this stock, what it does is it's a cloud computing stock. It makes it easier for basically, let's say, you need to code some stuff to make a software for the kind of move your stuff to the cloud. This what this company kind of does. It's a software as a service company. I mean, the company's been growing around 27%. The market cap, the reason this one's in here, it's kind of a little overvalued, a little bit. It's kind of stretched valuations like everything in the market. The market cap is only $4 billion. So essentially, it's a pretty small company, and that's why I kind of want to add into it. Anyway, the trailing 12 months is around $250,000 in revenue. Top line, it has no earnings, has a good balance sheet. That's the first one I'm gonna pick. Now the next one is Square. This one, basically what it is it's a processing fintech type stuff, and the market cap's sitting around 35 billion. I always look at the market cap; it's the most important number. When you look at how big the company is, the trailing 12 months for revenue top line is 4.3 billion. This company's growing around 41%, and I always look at these companies that are growing. That keeps growing, but the stock hasn't moved. The stock has underperformed the S&P. It's underperformed over the last year or so. I mean, it did well before that, but it just kind of stopped down. And then I did some quick cash valuations for it. Basically, I did some discount cash flows on it. What I call my quick equation. It's kind of like this big chart I look at. But anyway, I came up years ago. But basically, what this chart's saying, it's worked pretty well for the most part. It's around 39 billion. So the market cap will be 39 billion. So essentially, it's below that number. So what does that mean? If it is below, is it a screaming buy? I'm not saying it's a screaming buy. I mean, with these valuations, basically what you look at is you look at the revenue and how much revenue is converted into cash flow, and you kind of add it out for 10 years. So you basically, I mean, how much are you paying? So basically what this is saying, at this current rate, it will pay you $39 billion in free cash flow. So essentially it'd be like you paying $35 to get $39. That's what it's basically saying. Now, if that number can be boosted, it can accelerate. But if it just does the average of around 41%, that's what the revenue is for 10 years on average. And I might have good years, bad years, this, that. That's what it basically is undervalued. Now, if it's slowing revenue growth, if it continues to slow down, the stock could take a hit. But I believe at these valuations, I believe it almost accelerate. I believe it won't accelerate in revenue, but I believe the company will become more profitable, and that revenue will eventually squeak down to more cash flow. So essentially, that's why I like Square. I've bought this company around the 50s. So I still believe in this company, and I recommended it. I've recommended it a year ago, and it was been flat. It's kind of like Amazon, it was flat for there a while. Now it's screaming higher. A lot of these companies, they could be flat for a while. Like Tesla was also flat for a while. Then it kept growing under them valuations, and eventually going to have a big breakout. I'm not saying this could be as big as Tesla, but you could see a nice 10-20% gain, and from these valuations. Now the next one is GoDaddy. GoDaddy is basically the domain thing. I don't know if you ever started a website. Let's say you start a website, you would have to buy a domain. You have to go out there to GoDaddy and buy this domain off of them, and they do a lot of those services. But basically, that's what they do. The market cap's sitting around 13 billion. With this company, it has a trailing revenue growth around 2.9 billion, so almost 3 billion. So, and now I did the same thing with the discounted cash flow, but this one's a little easier to judge because it's growing around 15-14%. When you get up to anything over 20, it's almost speculating, almost a little more speculation, because you're calculating that into this, and this is around 16 billion. So essentially, this company is actually undervalued. And once again, I mean, the characteristic of these basically of GoDaddy is basically it's just been flat and it just had a good quarter, and that's when you kind of buy on these ones. You just kind of wait for them to turn around and then buy. You don't I never really buy. I never really add to my losers once they go below 20-30% loss. I just kind of leave them there and just call them dead weight, which actually in my portfolio, knock wood, I don't even have anyone below 31%. My worst pick is I think Arista Networks, and that's only down 15%. So you keep holding on to these, and they do eventually do well. The market eventually, everything keeps growing. If you pick a business, it keeps growing. Valuations keep growing. It might take a while, and I'm not saying it will beat the market every time, but normally you get your money back if you pick great companies. And all these companies, I think, are great. The first one now to go over is the first one was APPN. That's ticker symbol, and basically, I believe, it helps cloud computing. It's kind of what this is kind of the high growth story. Maybe this company be a $10 billion company, $7 billion company. I mean, that's almost double where it's at now. That could be almost $120 stock. It's trading around 60, or it could get hit pretty hard. And it falls, it could fall pretty hard. And next is Square. Square is basically this one that's been flat. I believe it can go higher. GoDaddy is basically same story as Square, been flat for a while, but I believe it can go higher. I believe once these valuations go catch up to them, then they go a lot higher. Then they go start pricing in future earnings, and they won't blow it. So essentially, Square is basically what it says is they won't keep up these revenue growth. Now that's what you have to believe with these companies, but I think GoDaddy can easily do it. I mean, think about all the companies that use, that is basically the internet, all them websites, and they have all them, and they sell them, and do all this and all that. So anyway, that is how it works. These are the companies I picked. Make sure to like and subscribe, everything like that, and leave a comment, see what you guys are buying and everything like that. I like having discussions. Anyway, thank you for watching. Thank you.